Sorry, this is 20 minutes late. I had all kinds of stuff come up. All right, it's going to be a good show tonight. So Wussy Wednesday, and maybe I shouldn't have said wussy, maybe because that's kind of a pejorative term. You know, it's not a compliment when someone calls you a wussy. I know I've been called a wussy my whole life, but I meant it as a joke. It is good to be safe. We could have also called it Paper Hands Wednesday or something. I don't know. But anyway, these are the ETFs that if you do have the high yield ETFs, that if you do have paper hands, or if you've been called a wussy, since you were in sixth grade, these are the ones that might be more suited, the high yielders that might be more suited to you. All high yielders are somewhat dangerous. I mean, just by the fact that they give you a yield, and you get the yield pretty much whether or not the underlying strategy or, underlying assets make money or not. So that degree of risk is on all of them. However, there are some of these things that are based on underlines that are innately a lot safer, like bonds or whatever. And then there's some of these that use option strategies that are a lot safer, like funds that use callers and use constant put protection. They're on the safer end of the high yield funds also. That's why I like ULTY so much. And it really served me well in this pullback because it's outperforming K yield and blocks and alt-I and everything else, or most other things. All right, so let's get this show going. But yeah, maybe I need to work on my branding for the show. It could have been called Panicking Wednesday or something, but it's just because it began with the W. So all right, so let's share this darn screen, but it's good to be cautious. I could have called it Cautious Wednesday or whatever. Wasn't trying to make a pejorative term. All right, let's see what the market's doing first and foremost. Let's see here. All right, 30-minute chart. NASDAQ selling off a little bit from the close today. Or actually, it rallied after the close. I'm sorry. Yeah, it actually rallied from the close. Here's 130, 233. So yeah, it actually rallied from the close, took out the high of the day, and then sold off. So let's look at Bitcoin because that's the only thing that matters anymore. I mean, in these high yield funds, especially all the ones that I have, like blocks and alt-I and everything, are heavily correlated to the Bitcoin price. All right, so this thing is down to 72,000. I mean, that's still really darn good, though. I mean, we took out 70 because the other day we touched 70 on February 9th, and we touched it the other day. Well, February 14th, Valentine's. Then we touched it on February 25th, and then again the other day, Monday. Well, now we got above it, kind of came back and retested the area, and so far it's held. Wow. Okay, well, that's going to certainly help out those old high-risk funds that I happen to love or happen to have. Anyway, the high-risk funds do the better option strategies. I'm not interested in a strategy that gets 6% and capture yield, no matter how good the total return is. I have plenty of total return. I have Vanguard. I have everything. I'm not worried about that stuff. In my high yield portfolio, I want high yield. All right. So, hey, Joe, what's up? Let those winners run in your future. Oh my God, I had a bad day today, but let's not even talk about it. I mean, we'll talk about it later, but I don't want to burden everyone. I mean, yeah, I have a question or two to ask you. All right. So yeah, let's get this show going. Where is the show? Have I even got it ready yet? Let's see, Wednesday. I thought I'd got it ready. Okay, there we go. All right. So we'll sort them by yield like we always do, and then we'll finish up by sorting by max factor, short-term max factor. Okay. So TLTW has the highest yield of these relatively safe ones. Now this is based on bonds. I've had this one myself. This one relies on interest rates to go down. This would not do well in an environment where interest rates are rising. It's just like anything else, just like in the same way that SPY doesn't do well if the market's falling. But anyway, but if you, it's a way to play rates falling or staying steady. I mean, anyway, MLPD. All right, this one is let's go look at this. Let's go look. MLPD and MLPI have become really popular lately. The MLPD is the Global X version of this, and then MLPI is the NEOS version. All right, so let's go back here. All right, so RIV, the River North Opportunities Fund. Look at this thing, paying 13%, super stable. YYY, more closed-end funds, paying 13%. Very stable. So if you're on this list, it means you're in the top. You're out of 200 and nearly 300 ETFs we follow. It means you're the 20 safest. Now, it doesn't mean the 20 that are, it doesn't mean safe as far as guaranteed to make money. Some of these safe ones could lose money hand over fist, but it means they're less volatile. But if if the underlying asset's going the wrong way, like at TLTW, if interest rates doubled tomorrow, TLTW would be a terrible investment. Just like SPY would be a terrible investment if the market dropped 50% tomorrow. All right, so YYY is it's a ETF built of closed-end funds, but I just wanted to show you which ones it has. It has AOD, which is the BlackRock Total Dynamic Dividend. It has the old ECAT, the BlackRock Capital Allocation ESG Trust. Then it has some WDI, and then some other ones that don't have links to them for whatever reason, but it has BCAT. I know the ticker to that one, BlackRock Capital Allocation Term Trust. That's BCAT. Double-Line Income Solutions Fund. I used to know the ticker for that. Tortoise Energy Infrastructure. That one is TYG, right? Or no, TYG is something else. Let's go see. I'm getting better at these closed-end funds. Yes, I got one. That is TYG is Tortoise. Okay. Anyway, let's get back to the show. All right. TLTP, also based on bonds, also wants interest rates to go lower or be steady, pays 12%. Nice job. These are some pretty decent payers for being super safe. SBAR is the first one based on stocks, and it's super safe. It's a barrier option attached to it, which is like another form of a buffer, but it is based on stocks. This SBAR wants the market to go up. And yes, it has a big barrier on it, but it'll still do better if the market goes up. HYGW, this is high yield corporates. The HYG is kind of a good index. This is a bullish play in high yield corporate debt. KHPI, we talked about this one today. This is the Kensington Hedged Premium Equity Income Fund. We looked at that today after work. Look at that, yielding 9% and super safe. FIAX, safe. I mean, that's a good one, yielding 8%. It's on the safer side. JEPI, wouldn't be surprised if JEPI wins. This thing is on a generational run. Remember, this thing isn't trying to tell you the best ETF in the history of the world. It's trying to tell you the best ETF if you're trading, lately. It's a trader's index. And JEPI has been, in other words, it factors momentum in, and JEPI has had a lot of momentum. Now, it doesn't pay a lot of yield, but it'll factor that in, but it does have a lot of safety, and it does have pretty decent NAV returns, so it'll throw them all in there. Sirloin is paying 7%. CEFS is another fund of funds of closed-end funds. Let's see if I can name the tickers in this one. I'm getting good at these closed-end funds. So down here, okay, without even looking, the first one, Asia Gold and Precious Metals. I used to know that one. I don't know. BlackRock, okay. Science, BSTZ. ASA, okay. Well, I should have known that one. Van Eck Gold Miners, I got that one. It's GDX. Oh, there you go. I'm getting good at these. That's an ETF anyway, so it doesn't count. All right, that is CEFS. Then we have AC2. Speaking of, we were talking about it after work today. We were darn sure talking about AC2. after work. That's a auto callable from, I forget if it's from Innovator or Calamos. I think Calamos. TLTI, and the third bond-based one on here, still wants interest rates to go down or be steady, but I mean, they're supposed to be going down though. So the TLTs might be decent plays. All right, then we have Riser. This one is the opposite bet of TLT. It is a way to get fixed income. It's like YQQQ. YQQQ is basically short the market, but it'll still pay you fixed income through a covered put strategy. Riser somehow does the same thing. It gets long interest rates. So it's sensitive to interest rates, that if interest rates go up, this thing's NAV is designed to increase with it. And it's designed to pay you a yield along the way. So this is kind of similar to a YQQQ concept. And then we have BuyW. That's a buy right fund or a covered call fund. Old timers call them buy rights. That's paying 5.9. Then we have SPUT. This is that State Street? No, it's not State. Let's go look at SPUT. It's a short. SPUT stands for short puts. A short put's another form of a covered call. Yeah, it's Innovator. A short put is synthetically a covered call. So it's the same type of thing. You want the market to go up. You make a little bit of income off the premium of the puts. It's same thing as covered calls, but you don't need to own the stock. You can just sell a put. It's the same thing. Basically the same thing. Same risk, same reward. That's yesterday. Is that yesterday? No, that's today. So I'm not talking about. I like how they're making these white. These look a lot better lately. They're a lot more readable. Anyway, SPUT. And then we have BondI. Okay, that one's from Neos. We all love Neos. Yields about 5.6. Then we have CanQ yielding 4.77%. All right, so let's line them up by stable decks. That's always the next thing we do. So HYGW, the one based on high yield corporates, has been the most stable. Now, it's only the past 90 days, but it's been 3.7 times as stable as the broad market the past 90 days. That's what the stable dex tells you. BondI has been 3.68 times as stable. BuyW for a covered call fund. Covered call funds are not known for their stability generally, but this one has been super stable lately. Sirloin, FIAX, SBAR, Riser, but these are all stable. The least stable one in the whole bunch, which is AC2, the auto callable, is 45% more stable than the SPY. All right, so let's look at some other stuff. The Moxie ranking is interesting to look at sometime. The Moxie ranking just gives you the best total return relative to the risk that you're putting on to get that total return. And you can see right here, I mean, I can see why this got number one. It has the best total return on the whole list. In other words, look at MLPD has twice the total return of whatever's in second place. Okay. The one in second place has almost twice as much safety, but not quite. When you price it in units per units of stability, MLPD's the one. But I mean, BuyW could work also, you know, and then you have ones that pay even less that are a little bit more safe. So anyway, that's just another kind of side index, but really the you could do worse than just looking at the Moxie index. The Moxie's a long-term look also because it needs a year's total return. So it's not really part of the max factor. The Moxie's more of an allocators index. And I mean, I think MLPD, BuyW, BondI, CFS, those could be good allocations, KHPI. All right. So, but let's just do the short term. Well, first of all, let's do the quarterly NAV return. Let's just rank it by that. Okay. Well, JEPI is number one on quarterly NAV return. There's no way this JEPI doesn't win. I would think. Let's go sort it. Yeah. I mean, but JEPI is just on a general. People don't realize. I didn't realize until I pulled up dividend. I mean, it's spanking anything else I choose so hard it hurts to look at. It's throttling stuff. I mean, I read it against something I like. I forget, you know, SPY-I, QI, something that's good that I was trying to find something good to run it against. looks like maybe this isn't going to work, but yeah, this thing has been on a generational run. So let's do it like this. So let's get a little stock analysis out. Comparison tool. All right. So let's see. Let's do, let's do JEPI, but I was trying to think of the competition. I guess we'll do SPY. Like I say, and SPY is a really good fund. I'll put in stuff I like, Alt Y. Let's put in blocks. Let's put in, what else do I like? K yield. I mean, you guys know what I like. QLDY, etc. Okay, so we have something to look at. Okay. All right. So total return past 3 months. I mean, I'm encouraged to see that Alti's on the positive list in total return for 3 months. But be that as it may, it's not doing nearly as well. I mean, as SPY is doing 3 times over 3 months, SPY has tripled ULTY's performance. ULTY is having a great run also. ULTY is beating a bunch of stuff since its strategy change, but it's certainly not being JEPI. See, it's even right. Where's okay? Yeah. All right. Yeah, JEPI is having a good run. Let's look at SCHD now. SCHD is not a high yield fund. It only yields 3% or something, but we put it in here because it's so widely owned and so many people love it. And that's the one I was thinking of. SCHD is the one that's beating people so hard it hurts. JEPI is impressive also. JEPI is no slouch. I mean, you go back even on the 1 month, and Alti's doing well. ULTY is just having a good run, plus 1.37, competing with all these other guys. When's the last time you saw that? Beating K yield, beating SPY, beating QLDY, beating blocks. Heck yes, ULTY. Heck yes. All right. Well, too bad I sold all of it, but anyway, I have like 6% left. So nothing wrong with taking a profit when the market offers you one. Last September and October, the market offered me a huge profit in ULTY, so I was happy to cut the size a little bit. All right. Well, what else could I compare it with? But yeah, those are the standouts. Let me put some other good ones in here too. T-SPY is a good one. We'll throw in TSYX for low leverage. T-SPY is good. It's not doing as well. That's just 1 month. On 1 month, anything can happen. All right. So on 3 months, it goes SCHD, JEPI, SPY, ULTY, T-SPY, QLDY, K yield blocks. Let's throw in a little sticks. My friend Chad likes to call it sticks. Where does sticks fall into line here? Sticks is SCHD, JEPI, SPY, UL. SCHD really shouldn't count because its yield doesn't pay enough to live off of. All these other ones pay enough to live off of. I mean, because even JEPI low paying it, you could, I mean, it's like 50, 60% more than bonds. Now it's not guaranteed. SPY pays a generous, 13% usually. Let's just go down here and check. 11.8 on SPY. Let's see, JEPI 8.6. Man, just think if they would just cut Alti's dividend to the same as this, Alti be throttling all of these, probably even SCHD. But anyway, that's not what Alti's about. It's about maxing out the dividend. So, or the distributions. Yeah, that's a heck of a run. Let's look at a little TDAC. Oh, Alti's still in third, or Alti moved up to third somehow. Anyway, let's look at little, what else is good? FEPI. How about Maggie? Everyone loves Maggie. I guess we're out of room. All right, let's see if FEPI can knock ULTI. No, JEPI, SPY, ULTY. Those are all, I mean, those are all good funds. It's just the underlines to FEPI have had a rough time lately. It has a lot of the big text AI type data center stuff that kind of taken a hit. Man, speaking of taking a hit, man, blocks, Jiminy Crumbity blocks. Anyway, let's look at ULTI to make blocks feel better. All right, blocks. See, it's not so bad. It is so bad. ULTI is beating you, blocks, over this time frame. Blocks, you got to be kidding me. No, blocks is still ahead by a little bit, but not very much. Come on, blocks. You got to be kidding me. All right, guys. What do you guys want to talk about? Hey, Bond is back. Sorry, this is late. Alan's here. We got Joe in the house. Yes, let the winners run. Let the winners run. I just had a rough day. Everything I did today, it's one of those days where none of my trades were even in the money that much. They all, some days I get, usually I can get a good trade and it'll go in the money, you know, and I'll have a runner and then it'll come up and I'll move my stop too close or something. I should let it run. I didn't even have a chance to do that today. Everything I did, the market was just so, but I realized that before I blew up my account. I'm still positive, but you know, so luckily I wasn't, you know, I didn't like get mad and try to revenge trade, but yeah, there are some good names in there. There's lots of choices if you're trying to diversify blocks. So I diversify blocks with YQQQ, with ATTR, and Salty, which hasn't been doing very well, but Salty will do bad in a market panic because it has all those high beta names. But anyway, yeah, I diversify them that way. But I mean, whatever I'm doing, it's going all right. I'm still positive on the year, barely though. But it's a lot of that's Case Hill. I mean, for the past year, a lot of that's due to, and that's even despite having ULTY, which had a terrible fall, and blocks, which is having a terrible spring and fall. You know, it's even despite having those. But I like I say, I really don't have that much ULTY left. It's either 9 or 6 or 7. It's not very much. But blocks is like 11. K yield is like 11. And those have been, K yield's holding up a lot better than blocks, but even K yield's not doing as well as ULTY. ULTY is just having a generational run this past quarter. I'm glad they finally fixed it. Yes, 3 times today. Yeah, I do 3 live streams most every day. Have you been here 3 times? Is that what you're saying? Do we got a blocks fan in the house? Not everyone's as enamored as I am. I get a lot of crap for liking all these risky funds, but I mean, like I say, that's why, but I always caveat them a bunch. I mean, by saying, if you're a young guy, stay away from all of them. Yes, any type of yield is yeah. But if you've had some growth in your portfolio, you can elect to later in your life, in my opinion, use part of the money that you've acquired over the years and even realizing, hey, this is going to underperform. Okay. It's going to underperform, but it's going to pay you a yield. So, but yeah, there are some good names in there. But really, my K Gold and K Silv is the main thing that's holding the account up. It doesn't really have to do with my hedging. YQQQ is doing all right. Salty's doing terrible. ATTR is doing what it's supposed to do. But that K Gold and K Silv aren't hedges. They're diversifiers. But man, they've just been on fire. So ISBG did really well on Upside Monday, but seemed to get capped hard today. Correct. I noticed that too. Blocks, on the other hand, clearly outperformed. Remember, there was a controversy last week about the blocks that overhedged or something, which was ridiculous. But blocks is doing what they're supposed to do. But any event, they weren't overhedged today. You know. But I checked the positions, and I think the hedges may have expired on Friday. But whatever the case may be, it looks like David did not elect to put them back on. good choice for today. And I'm not saying the hedges didn't maybe hold them back last week, but last week was a great time to be hedged. The market could have crashed. It just didn't. It came close. It's been coming close all year. So, yeah, one day last week it was up 3, and the other one, like ULTI was up 5 or something, and people are saying it's overhedged. Maybe so, but the thing about blocks, I know we're supposed to be talking about low yielders though, but or safe funds, and blocks is the antithesis of safe. All right, so let's talk about blocks here. All right, and then let's talk BTCI, XBTY, YETH, YBIT, SEPI. SEPI's the one. SEPI's beating blocks lately. SEPI's haven't. Speaking of generational runs, SEPI's on a generational run. SEPI's doing a great job. All right, so I mean, blocks is a bullish bet on Bitcoin. If Bitcoin drops, these are all going to suck to varying degrees. Blocks is sucking way less than some of these other ones, down 15%. And blocks has been spanking them for a while, even at the lows, which wasn't great for blocks. There were still 3 other ones from good companies. There's nothing wrong with BTCI. There's nothing wrong with, but and let's see here. Oh, wrong one there. So everyone says blocks is dangerous. But a lot of those people have BTCI. So teach his own. Like I say, I have plenty of growth other places. When I make a high yield investment, I know that I'm sacrificing total return. But I'm getting, for every give me, there's a gotcha, like they say like Dr. Jim says on Tasty Trade. There's a cost. There's a cost for everything. Not that there's anything wrong with these funds, but these funds are just taking it really hard. The one that looks impressive just visually, and I said this the other night, look at that purple line right there. Let's get this here. I'll talk about ISBG too. I want to talk about that. Let me zoom in a little bit if I can, if it'll let me. Well, anyway, look at that purple line right there. This XBTY, and it's because they sell out of the money options, and out of the money options aren't as sensitive to the delta. They don't move. In other words, they don't move up. They certainly don't move up as much if the market moves up, but they also don't move down as much. An out of the money option is like a buffer. And I'm not saying this is a buffer fund by any means, but, XBTY has not been a great investment. But this past quarter, when the other one sold off like a big dog, it really maintained its NAV well. Now, the thing is, it got passed by blocks. Even though blocks went down further, it goes up further. So if the market's going down, you might, XBTY might work better. But I wouldn't say that actually. But in this case, XBTY would definitely worked out better. But if the market's going up, of course, you couldn't get a better one than blocks. That's why I like it so much. Anyway. All right. So let's go out over 6 months. But yeah, SEPI looks really good there. Look at SEPI. But over 6 months, blocks even shines more. Look at the difference. And people say blocks is risky. Yeah, okay. Yeah, it's risky. They're all risky, but anyway. Like I say, each his own, not financial advice. But if blocks, but I'll say this: if blocks is too risky for you, get you some SEPI, because my gosh, that's a good looking fund. Now look back here, SEPI wasn't up near as much, but it's doing better now. Over 6 months, that is a good looking fund. Let's throw in LFGY. LFGY is done terrible, but recently they've been doing better for whatever reason. So let me just throw it in here. So LFGY, I hate when there's too many golds, but LFGY is, I'm going to take IBIT off there so we can see it. Okay. So would you take a look at that over 6 months? LFGY is beating my boy Blocks. I still would rather have it because it doesn't do as well on the way up. I bought Blocks because I think crypto's going up. It's a tactical play. I was wrong, but that's why I have it. But good job. That's actually a good look for LFGY. Now let's get on a shorter time frame. On the shorter time frame, it's spanking Blocks. Look at that. But of course, so just because it's spanking Blocks doesn't make it better than Blocks. I mean, Alt-Y is spanking Blocks. Alt-Y is spanking all of these. I mean, do you guys like Alt-Y? Probably not. So, but it is a data point to consider that LFGY is better than people think, better than I thought. I just haven't looked at that lately. It's just really poured it on lately. It has not, over a longer period of time, it's not looked great. Because although I bought it after April and I did well, but LFGY was down 16% at the lows. That's not too bad, but I don't know what date that started from. But then LFGY by midsummer was plus 27. BTCI killing it plus 50, or no, not plus 36. LFGY was plus 32. YBIT was plus 36. Great job, YBIT. And then old BTCI from Dios just doing a great job. Let's go a little bit further down the line. Then by the time we got to August, YBIT passed it, the yield max strategy. And BTCI passed it back. Then YBIT passed it back. And then Blocks just came out. So it's not, but Blocks, that you want to talk about the generational run. At one point, Blocks was up 50%. It went from 10 to 15. I think even if you don't include dividends, it's a monster. And like I say, I bought it because I'm bullish on crypto, not. So anyway, how risky it is it don't look super risky there. Plus 5%. There were some time mismatches there, to be sure. So let's get Blocks out of there. Let me knock Block. Let's see some of the ones that have been around longer. SEPI's been around for a while. LFGY's been around long. Okay, let's compare some ones that are more apples to apples. So this is over the past year, and these have all been around long enough to be on the chart. So of the old guys, boy, SEPI. Look at that SEPI. I wonder if FEPI can beat SEPI. Now, FEPI is not crypto, but FEPI can beat. But a lot of people like FEPI. Heck yeah. Well, I wonder if YMAG's a lot better than people realize. Of course, it's number one. Yeah, all these people like Maggie have no idea, in my opinion, but whatever. There's Maggie right there, but Maggie does look darn good as well. Heck yeah. So look at that. If you go back a year, it goes YMAG 24%, FEPI 22, MAGY 22 also, SEPI 17, LFGY 9, YBIT minus 11, BTCI minus 11 also. Wow, that's not a good look for them. But they were killing it back here. BTCI went straight to the head of the class. I guess that just tells me it's a bull market fund. Or the way they were trading it, they were, whatever they're doing, they were doing it right when the market was going up. But it's the same strategy is not working great now. Anyway, YETH, of course, is based on Ethereum. So that's the only Ethereum one in there. All right. So let's see what you guys want to talk about. Yeah, I have a graphic about ISBG. Let's look into that. So, yeah. You got an NDIV idea from Discord. Okay. NDIV. Okay. Let's throw some of these up here. Let's get rid of the crypto guys. I know this is supposed to be a show about safe stuff. And here I am talking about LFGY, Blocks, SEPI, YBIT. None of these are safe. XBTY, for God's sake. All right. So yeah, let's talk about, MLPD. Now, I don't think it has a lot of data, but let me just punch in MLPI. Let's see if we can get a little 3 month there. Well, it's basically at the same spot. Okay, well, one thing, without even knowing anything else, I mean, one's Global X and one is Neos. And I mean, I just, without even knowing anything else, you would have to I would have to be leaning towards Neos. They're just a very solid company. Global X is solid too, though. They have a long history, and I bet you the Global X one will do better in a down market because they sell closer to the money options and stuff. But over the past 3 months, man, this MLPI has just been putting it on. All right, so Indiv, yes. Now I saw that one the other day also. It's in the Max Factor. That's, you want to talk about a run. Now it did pour though, but of course, gold and silver were getting crushed. Well, this is natural resources, but the natural resource play came back into vogue at the first of the year. And as evidenced by such, you could even look at things like XOMO that are just, that are doing great. All right. So out of those three, so let's see what we have to work with. So MLPI is 3%, but it hasn't been around that long. It's only been around not even 3 months. So that really equates to 12, 15, something like that. Now, Indiv only pays 4.95 because it has been around a year, I think. Let's look. Yes. Okay. So it's, so it pays, that pays, about what bonds pay. And what I bet they do, and I think I read the prospectus the other day, they actually have some stocks that pay real dividends, and then they sell, then they sell options on those, sometimes not, and they're based in energy and natural resources. So we have Petrobras, whatever, however you pronounce that, Lyondell, Basel, whatever. Dow, Northern Oil and Gas, probably Eastman Chemical, Kinetic Holdings, Flex LNG, Southbow, CVR, good old Oklahoma company, Noble Corporation, or they were founded in Ardmore, Oklahoma. The Noble family's from Ardmore, Oklahoma. CRGY, Crescent Energy, Atlas, Kodiak. Anyway, they have some midstream stuff too. I mean, that, a lot of this stuff is pipeline, whatever. Dorchester Minerals, never heard of that one. Kimball Royalty Partners, Mock Natural Resources, Alliance. So, but if you look at it compared to MLPI, we have, I'm trying to find the ones in common. So far, I haven't seen any. Speaking of Oklahoma companies, there's one right there. A lot of pipeline companies in Oklahoma and Kansas, just because of geography. Target, Cheniere. Okay, this is the first one they have in common, Pembina Pipeline. ET, I know that's a good one. I don't have it, but I've heard people sing its praises for years. Or people used to like it. I don't know. I should say I know it's a good one, but I mean, let's go see if it is a good one. Yeah, I mean, been out since 2007. I mean, you remember when oil hit $100 a barrel or more in 2014, 15. Yeah, obviously a benefit. But then I also remember when oil crashed in 2020, spring of 2020, and this thing almost made an all-time low. That's how the energy business is boom or bust. I mean, it just, there's no in between. But I would say MLPI out of I don't know. Indiv looks good too. It just depends on how much income you need. If you need less income, maybe Indiv would work. But It's almost always the ones that pay you more income. They almost always take more risk, but not always. But even if they don't take more risk, it's still harder on the NAV because it's a bigger payment coming out monthly. All right, so XBTI outperforming BTCI is interesting. They pay big dividends. Well, of course, if I put on NAV return only, it's going to be dead last. I mean, well, we should probably go, but yes, on a total return basis. So, but remember, total return really only counts if you're either using the dividends to pay. If you, in other words, if you're using, maybe people that use the dividends from their high yield stocks to buy growth stocks, yeah, that's fine. But if you're living off the dividends, then you want one of the lower paying ones like SPY or, because at the end of the day, the dividend comes out of the NAV. That's just kind of the way it works. Let's look over here at, all right, here we go. All right. So I thought I must have. I was going to look. Let's do a more critical analysis of XBTY. So then we're going to compare that one to, what's the NEOS one again? BTCI. Okay. And let's get it 6 month. Okay. Yeah. So you can see there, it didn't drop as fast, but it's not catching any upside. BTCI dropped a heck of a lot faster, but it's able to, at least, it's able to turn the corner. But it was just impressive over that little period of time when it just didn't drop when the other ones did, really. It just kind of went straight sideways. Let me put in blocks or something else for comparison. Yeah, that just shot straight down, or yeah, that is, it was somewhat impressive. Who knows? Maybe they, who knows? I don't know. I don't know. Maybe they saw it coming and they hedged or something. I don't know. But on from a more critical basis, what I was going to say. So let's look at it year to date. Okay, XBTY doing well. It's only down 14%. Okay, well, but NAV return is down 27%. It's just paid such a darn high yield that But if you're living off of the entire yield, your portfolio is down 27%. It's negatively compounded. You guys know how that works. But it pays like 100%, so you could live out. You could reinvest 4/5 of it, put 80% of it. You don't have to go back in here. You probably want to put it in something like BTCI. I'm just joking, or blocks. But no, but you could reinvest the rest of it, and I guess it counts if you're paying bills too, because but you just have to be aware of the effects on the NAV, and the ones that are the triple-digit payers are just going to be detrimental. Blocks has a bad reputation. Its NAV's only down, it's still not great though, but it's not doing nearly as bad as BTCI on just NAV alone. So that's interesting to look at. That's why I hasten to call BTCI safe or something. It's just, it's definitely not safe. Or no, BTCI, yeah, I hesitate to call XBTY safe because of the higher yield. But it doesn't appear to be as sensitive on the downside or the upside. All right, guys, I'm going to go eat dinner. That's why I was a little bit late. I had to chop onions and do some prep cook. And then my friend's cooking hamburgers, but I could smell they're ready. So I'm going to go, or onion burgers. I'm going to go get me a good old onion burger and a little side salad. I have some romaine and some I'm going to make a little side salad and have a little dinner. Guys, well, it's been fun. I appreciate you guys being here. I think it was a good show tonight. Good show tonight. How did this happen? The worst one's SBAR, but these are all good. It's just SBAR. I mean, if you look at it on NAV, even though it's protected, I mean, it's only down 3%. That's no big deal. That's why it's stable to X is at 205. It's twice as stable as the broader market. But when you compare it to these other ones that are also twice as stable and have been able to squeeze out positive NAV, it's no shade throwing at SBAR or Sirloin or HYGW. Any of these could work. It's just they work in different circumstances, right? All right, guys. Hey, thanks so much for being here. I hope I answered all your questions. If for some reason I didn't, hit me up in Discord or something. I will be back in the morning for another live stream. I do 3 a day. All right, guys. Thank you so much, and I hope you guys have a wonderful evening.